of our next presentation or short video, which we have here, and I hope I don't mix up it again now. Okay, so let's see what kind of due diligence tools we have
Hey
in
everyone,
our platform.
investing today can feel like you're just drowning in data, right? So, how do you find the real story behind a stock? Well, today we're going to walk through a really powerful, structured process to analyze pretty much any company. The goal is to turn all that complex info into clear, confident decisions. All right, let's get into it. So, here's the classic dilemma every investor faces. Do you put your money on a century old giant like General Motors, with all its history and infrastructure? Or do you bet on a total game changer like Tesla, a company that basically rewrote the rules for the whole industry? That's the exact question we're going to tackle head on. I want you to think of this as your map and compass. Seriously, in a world that is just full of financial noise, having a structured approach isn't just nice to have, it's absolutely essential. We're on a quest for clarity here, and that quest starts with a simple, repeatable process. Now, before you even think about looking at a single financial ratio or a price chart, you have to ask a very simple question. What does this company actually do? I mean it. Understanding the business itself is the bedrock of any solid investment analysis. So let's see how to actually put that idea into practice. Here's our starting point, and it's actually brilliantly simple. Just two steps. First, we get the story, the big picture, by profiling the company. And second, we get a quick snapshot of its financial health by checking the ratings. That's it. Let's break down what that really looks like. Okay, so step one is all about the story, not the spreadsheets. Using our example, you'd start by just selecting General Motors and reading its company summary. You're just looking for the basics here. What are its main brands? Where does it operate? What are its big goals? You absolutely need this narrative before the numbers can tell you anything useful. Once we know the story, it's time for a high-level check on the numbers. This is where you can quickly scan the key stock mark's ratings. You're getting an instant read on its overall quality, risk, valuation, and momentum. And that interactive chart, it's awesome because it lets you see how those ratings have actually changed over time compared to the stock price. It's super insightful. All right, now that we've got our foundation, it's time for the main event. We're putting GM and Tesla right next to each other to see what the numbers can tell us about their completely different strategies and their place in the market. This is where it gets fun. So, our first metric is going to be balance sheet efficiency. Let me put that in simple terms. It basically asks for every single dollar of capital a company has, and that includes both its debt and its equity, how much revenue can it squeeze out? It's a really powerful way to measure how well the business is actually running. And wow, the results could not be more different. Look at that. Tesla shows positive efficiency, which means it's doing a great job using its capital to drive sales. GM, on the other hand, shows negative efficiency. Now, this happens a lot with older legacy giants that are weighed down by massive infrastructure and things like huge pension plans. Right away, this tells a really clear story about old versus new. Now we can dig even deeper with a cool tool called DuPont Analysis. The best way to think about this is like a mechanic looking under the hood of a car. Instead of just seeing the final return on equity number, it breaks it down into the three things that actually drive it. First, profit margin. How much profit from each sale? Second, asset turnover. How well is it using its factories and gear? And third, financial leverage. How much is it relying on debt? And this is the exact question DuPont helps us answer. You see, is a company's high return on equity because it has amazing profit margins? Or is it just because it's loaded up with a ton of debt? The why is always, always more important than the what. Of course, no company exists in a vacuum, right? So the next logical step is to benchmark both GM and Tesla against the entire auto industry. Are they leaders or laggards when it comes to things like profitability and efficiency? This context helps us figure out if they're true outliers or just part of the pack. And this all brings us to how the market actually sees these two companies. GM is valued like a mature, stable company. It trades at a discount. But Tesla? It still commands a really high price to sales ratio. That tells you the market is pricing in massive future growth, a classic sign of a disruptor. So we've gathered all this information, the story, the numbers, the comparisons. What do we do with all of it? Well, the final step is to bring it all together into one single comprehensive view. And here it is, the summary due diligence report. This is the culmination of our entire process. It takes all of those individual data points and weaves them into a coherent story, complete with ratings, key highlights, and a final recommendation. It's your entire analysis crystallized into one place. Let's take a quick peek inside. The report really gives you the full picture. It starts with that business overview we talked about, then dives deep into the financials and valuation. It even adds in things like market sentiment and future estimates. And, this is crucial, it backs up every single point with clear, easy to read charts. So, after all that work, what's the final verdict? The report synthesizes everything down into a clear, actionable conclusion. For General Motors, this whole process leads to a rating of above average, a price target of $45, and a clear buy recommendation. So, we've just walked through a complete analysis from start to finish. We took a complex question and used a structured, step by step process to get to a clear answer. And now, the whole point is to empower you to do the exact same thing. So let's just quickly recap that powerful workflow. Remember the core steps. Start with the qualitative story in the Analysis tab. Then use the comparison tools to see how that company stacks up against its rivals. And finally, generate that amazing due diligence report to bring it all together and really validate your investment case. And that's really how you go from being overwhelmed by data to being empowered by it. The tools and the process are right there for you. So the only question left is, what company will you analyze next? Hope you found this helpful, and I'll see you next time.
Okay, then go to the platform and see how you can use our platform to help you in your due diligence analysis. When I get what I want to know something about a company, especially if it's a company I don't know anything about, the first thing I go to our analysis section and I search for the company, of course. Let's put here the GM. And the first thing I do, if I don't know anything about a company, is to write this very brief summary section here, just to know what they do and what kind of brands they have and so on. There's actually a section missing here, which is the market segments, but we haven't added it yet, but should already be here sometime. And of course, to recognize the company in terms of ID. So how do I ID the company, both in terms of ticker and the ISIN number and so on, to make sure that I'm actually looking at the right company, because sometimes the companies may have different names. And then I can look at the ratings, both looking at their values. You can open these and look at all the ratings. And but most importantly, I can look at the ratings in terms of a chart. And I have here some of the ratings, and I can see that they are not doing very well recently. And I look, of course, at the price, both the recent price, say the last 3 months. And say if I look at the last 3 months, I see the company is going down here. Should I get scared or not? So maybe I should look at for a longer period, or even look at the total historical period and see and make up my mind based on that. Or I can look at the recent return. The last quarter, the stock lost 10%, but in the previous one they had 137%. So, and also the upgrades and downgrades and so on. And I can look also at the quality of the company to see if it's very common. For instance, we saw that the company had experienced a decline of about 10%. And if you look at here, historically, at least for the declines of 10% are quite rare in the case of the company. So this is an important thing to notice. You know, if it's common or not so common, it's really very, very rare, at least in the recent past. But it is possible. And of course, I can also look at the competitors. And this is the big thing with our waterfall analysis, is that I have here immediately a comparison with GM4 and the industry. And I can compare with 4. I can also compare, for instance, I personally like to compare the revenue And I can see here that, for instance, last year the GM managed to generate $3 of revenue for each dollar of equity, and for managed to have $5 of revenue. So in terms of efficiency, business efficiency, I can of course realize immediately that Ford is doing better than GM. But do investors care about that? I'm not so sure. Let's see how they compare in terms of price to sales. $1 of sales in for sales are worth only 25 cents, and while GM sales are worth 38 cents. So, in fact, the investors are probably more bullish about the sales of GM rather than the sales of Ford. So I can look here. And if I compare with the industry as a whole, I have here for the industry, I see that the industry as a whole has a much bigger valuation, 67 cents on the dollar, which of course is influenced by the other car makers like Tesla and so on. Okay, so this is what we can do immediately. One thing that I also like to do, and a lot of people don't like it, but I think it's very useful, is to look at the actual numbers. What does it mean in terms of numbers? You see, it's a very funny thing because we see that in terms of numbers, the two companies have some similarity. They are more or less the same size. GM has more equity than Ford, basically twice as much. And if you look at some of the parameters, like looking at the operating ratio, which is here in this last line, the operating profit of GM is about it has declined to 2%. It used to be between 5 and 7%, while the Ford has used to be between 10 and 10%. It has now declined to 0%. So maybe that's the reason why the valuation and why investors probably are reacting so strongly against Ford rather than GM. Maybe that's one of the reasons. If you look at the industry as a whole, there's a 10%, also declined to 7%. This is one of the items that I usually like to have a look. But it's always important to look at the whole picture of looking at some of the numbers. The same with some of the margins, return on assets, return on funding, return on equity, that we talked a lot. And finally, as was mentioned in our short video, we can also use the so-called Dupo analysis. This is still a traditional way of looking, which is a way of decomposing the return on equity. You see the return on equity for GM was between 10 and 60%, has fallen to 4%. In the case of Ford, it used to be 10, 13%, is now negative, minus 23%. The industry as well as the whole. So this evolution in the return on equity, which is one of the most common measures of performance for a company, has been, it is usually decomposed into these items: asset turnover, so let's say revenue over the number of assets, pre-tax margin, and leverage. You see a lot of these two companies are using a lot of leverage, the impact of taxation, and the tax cover, which is a measure. this is, of course, this is actually a mechanical way of looking at the composition of return on equity, because in fact, if we're going to use this measure we had written here and we start decomposing it, the way we do it is, let's say we have this return on equity, and then we make it equal to return on assets, okay, times um, earnings before taxes, divide EBT divided by R, times what we have here next, assets to equity. And finally, we have taxes sobre EBT times income over taxes, if I'm not mistaken. Yeah, okay. So what do you notice about this expression is you'll see that a lot of these items cancel. Okay, so basically this disappears, this one disappears with this one disappears with this one, and this one disappears with this one, and you end up with just this. So you see, this is a sort of a trick to present the return on equity, but it really doesn't explain. It's not that there is no causality here. So we could add here potatoes and bananas or something like that, and would still get the same ratio, right? So we should be careful about this. This is a mechanical. So what we did was doing a very simple model, financial model, to actually come to the same result, but this time not based on this trick of eliminating the various ratios, but actually based on a very simple model. And with using that simple model, we came to the same result as the Dupont, the traditional Dupont ratio. And here we have it. So we have that in fact the return on equity is equal to the A here, pre-tax asset turnover, which we calculated as being made up of these items here, times leverage, times taxation. You know, taxation. And this gives us exactly the same value, but this gives it, and we split it the same. You notice that the leverage is exactly the same, 425, and this would be the same including the other two, this tax rate and this would be given this, and this together would give this 064. But here it is segregated in a more meaningful way. I can see, for instance, that operating margin, what is the role of operating margin, what is the role of gearing, it's another way of measuring the financing of capital, and the set turnover, and so on. But these numbers do not depend on any trick like the one we did here, but we give exactly the same result. The only thing we have is it is split in a different way. So if you really would like to explore this well-known ratio that is very commonly used, return on equity, if you want to use this, then probably you can come here and look at its determinants. Okay, so this is just a way of looking at our analysis section, but the analysis section has here an important feature as well, that if I want to generate a due diligence report for GM, for instance, I simply click here and I will generate a due diligence report, which is a 10-page report where we examine, well, here it is. We can now show you. How do I increase the size of this? I think it's here. So in this due diligence report, we have a summary. We have all the ratings, we have our analysis. So this is, and this actually was generated, and we have a lot of information. When I'm looking at the due diligence report, one of the things I usually look is this chart here. But of course, you should read the full report. I'm not saying advocating any shortcut. Or you can ask AI. This is one of the interesting things about AI. You can actually feed this report to ChatGPT and ask him to read it to you or to summarize it to you, and it will give you the summary of the. But personally, I recommend that you still go through the report, look at the various numbers. And I'm just telling you what I usually like to watch. I like to watch this chart, but it's just my personal opinion. I like to watch this one with ownership structure, changes in ownership, and I, going forward, I like to use this to see this chart as well. Oops. Especially the one here on the left, which for some reason I can't show. I think that's because I have increased the size. Okay. I used to look at the so-called fair value of the stock compared to the, for instance, if I compare with the GM with 4, this chart would tell me that the fair value should be higher in relation to 4. And not so much in relation to Tesla. It's here very small, but in relation to 4, it could be higher. Of course, I check this as well, but one of the charts I usually like to watch is this one here. Gives me an idea of who is buying and who is selling. Who is selling? It's something I like to know. I see there's a lot more of selling than buying among major investors, and I like to see this. And finally, I like to watch these tables here. So, which are our forecasts for quarterly revenue, for the book value, and for earnings per share. So these 3 tables I like to watch. And also, I usually like to see how we have been done in the past in our forecasts relative to the actual values reported by the company. And I must say that neither us nor the analysts in general have been too pessimistic. In fact, we have been very optimistic about the company because the historical results turn much lower than our forecasts. So we still keep believing in the better future for GM. But so I usually like to see this, to check how reliable we have been and also to check these tables here. Okay, so this is a way of using the due diligence report, but as I said to you, the beauty of this is that we now can feed this to ChatGPT, and it will provide us a summary of a rating of these reports together with another report that we generate in the section in the selection section. I can also generate a report which is useful. Let me just select here the US. Okay, generate the report. Change this number here for just one company. And then, oops. Apparently we don't have yet data for this day. Okay, so we have just one company here, Microsoft. So I'm going to add here GM. Okay, and there's also 4. Oops. And also Tesla. And I don't remember any other auto companies, so let's just put another company. Apple. Okay. Now I have 5 companies. That's all I need to generate a report. See, these are not the real peers of GM, Microsoft, or Apple. I just have them here. But if I were going to this report that we have just seen, yeah, if we're going to look at the report here, oops, you can pick up their competitors and peers here. So you have these companies here, and you can pick them and add them to the list there. So no big problem with that. So let me go back to the table here. So I have already generated this report. Now I want to generate a report. And here I have a so-called peers report, which is another due diligence tool that we have in our, okay, here it is. Here I can see, the quality of, in terms of rating. I can see in terms of diversification, the correlation between these companies. I can see their comparison of their financial ratios, all of them in the same table. I can see how they fare in terms of ratings, how they the kind of statistics you would have in terms of and also especially these charts here can be useful to see the trend for these companies, so you can use this as well. So this is another due diligence tool that we have in our toolkit, and together with the summary due diligence we usually run them through with ChatGPT to get to speed up our due diligence process. Now, another interesting thing that I wanted to show you very quickly is that we now have, okay, we have now a new model based on what we call the new alpha. The new alpha, which measures the relative growth between a stock and the market, and based on 4 different types of strategies, we and 3 reference points. We usually have, let's say, if, for instance, the stock was going something like this and this and this. Okay, so we take 2 reference points, which is the top and the bottom, and then we forecast what's going to happen in the next period based on these 2 bottoms and using a simulation technique. In fact, 4 different simulation techniques for these 2 points, which means that we have 8 simulations that give us the recommendation buy, hold, or sell. And I just did it before we started, and after 3 companies were analyzing, Amazon, GM, and Tesla, the only one that has now would now have a sell rating would be Amazon. So, funny enough, if I'm looking at 126 days, I think that's the horizon I was thinking. This so-called this kind of technical analysis, because it's basically based on the dynamics of the prices of these companies. I would say the one that has a sell rating. The others do not have a hold, but have a weight, which means that their trend doesn't give us certainty about the future outlook, but they also don't suggest that we should already sell the companies. So this new signals that we use are also, of course, very important when running a due diligence, because I can run it for, let's say I have a list of companies, or I have my entire portfolio. I can run it frequently and see what kind of signals I'm getting. If I have persistently a signal of sell on a particular stock, then I should probably check some of the items that we have seen, or check some of the analysis, some of the research, and so on. But basically, I have a strong indication that I should sell this stock. So this is an important tool as well that we'll have in our platform. Okay, folks, I think that's all for today. We must finish now, and I just want to wish you a very nice weekend. Just relax and be back on Monday. But just a request, please don't forget to create your paper account at Interactive Brokers, do a few trades, and then import those trades into our platform. Okay, nice weekend for everybody.